Testing. Okay. Hello everyone. Sorry, I was trying to uh, set up the stream properly. Well, today was FOMC. So today was FOMC, and then what we're gonna look is FOMC meeting minutes at 11 a.m. It already happened today. 11 a.m. California time. That's what I meant. So there was not much of a pop that happened here. Price went up. This is the first percent fair value gap at 9:30 a.m. today. The green line delineates 9:30, then 10 o'clock, 11, 12, 1, 2, and then we're going on to 3 New York time. This right here, if you look at this time, this is just California time, which is where I reside. Okay. Now price went up. This is pre-market session. This is 9:30 pre-market. Price opened up. It went up. It hit this black line, which is previous week's high. Okay, and I have I don't want to show much. Okay, so this is previous week's high. Went up there and it dropped. Okay, then price dropped. You see how the first percent for value gap did not get retraced to, right? Which is what I think is where we're going now. But price dropped, and then due to FOMC, price just stayed within this range. And then we're gonna go a bit higher. Um, see what I have here on the daily. Okay, so this was last week. This is the relative equal highs that were just tagged today. My bias is bullish for the week, still bullish, and for the foreseeable future as well. Last week we opened up, we created the double top, the relative equal highs, and then we dropped all the way to the low of the week at the 0.5 standard deviation, and then price did open up this week, rally went back up, and then we took that high. Today is Wednesday. Tomorrow, what kind of news do we have? Unemployment claims at 5:30 in the morning. So that means that tomorrow at 5:30 in the morning, New York time, California time. So that's 8:30 New York time. Price will give you a lot of volatility, but then it will set a pretty good day to trade. Today was very, very difficult just because price remained within the range after 9:30. So this is 9:30, and this is the range that it will remain under because it was waiting for FOMC. that's pretty much what happened. There's not much to do today. As you can see, I do trade live. I don't know if you can see it on the stream, but let's see if I can show this to you. Okay, so yeah, you are able to see it. So you can see it's AMP live. I didn't take any trades today. The reason being because it's FOMC. I learned that there's no reason to take trades on days like this. FOMC, CPI, PPI, NFPs. Its price is always gonna act like this. Now I wanna show you something. Not on this one. Where is? Take that off. Okay. So this right here delineates the regular trading day opening time. So it was for today. So it was Tuesday at 6 p.m. New York time. That was the opening. Okay. Now, look at this. Price drops around 5 o'clock in the morning. New York time to hit the low of the day at half standard deviation. And just stick with me for a second, okay? You didn't see me draw these lines today. This was already preset, okay? It was the lines were already there. If you see the stream, if you watch the stream, I didn't draw any of these lines. I haven't even drawn anything, to be honest with you. That is previous week's high. This is this whole thing is today's trading. Okay, it came down to the zero point 0.5 standard deviation to create the low of the day during London, and then it rallied. Okay, it hit the high of the week at 0.5 standard deviation. That's something else entirely. But then it hit the high of day today at 0.5 standard deviation here, and then it retraced. Then it went back up and it hit the high of day standard deviation 1 right before, it was around 8:40 in the morning New York time, right before the New York session open. The New York session open, this right here. Price rallies up, and then once it takes the previous week high, the liquidity up there, it drops. And then it holds in this range. And then it's surely it's going back up. So could there have been trades here? Yes, they could have. Very easy. Okay. If you look at the pattern, it's very simple. You created a high at 11 a.m. New York time. Then price drop. Then price rallied to take that high, and then price drop at 12. Then at 1, it rallied, took the previous hour high, and then it dropped. Okay. And then it rallied to take the previous hour high, and then it dropped. And currently we're here. Okay. You have a fair value gap here from this high of this candle to the low of this candle. You also have the 930. I'm going to extend it. First presented fair value gap here. We have the low of the day. It's not going to go any lower than that unless something happens. And I believe we have the high of the day. So price is getting pulled to this. But it's going to be a slow grind type of day. And right now we only have 1-2 more hours of trading in the day. So we may not even make it there. But that's my analysis for today. As I said, I didn't take a trade. Yesterday I gambled and I took a trade and I lost $100. But it was just, I shouldn't have done it because the price was not giving me anything. It happened here. So price open at 930, drops. First percent for value gap didn't give me a retracement. Rallied. This order block held. Came back into it. That could have been a trade. But I wasn't in front of my computer at that point, was I? Yeah, I don't think I was. But I took a dumb trade. Let's see if I can show it. Oh, it wasn't on the MQ. It was on the mini. Yeah, right here. It was right there. Okay, it was after 1:30. I bought when it tagged the first percent for value gap for the afternoon session, and then it came back to me for 8 pips, and then it rallied. Then it dropped a little more, and there it rallied. But let's see, when was the last time that I took trades before yesterday? It was last week. Trying to show those to you. Right here. This was Thursday. That was my last day of taking the trade. And basically what he did is I sold for 15 points. Why did I sell here? So let's delineate 930. And then let's do 10 o'clock. And then I'm gonna do 11 and 12. Okay. So why did I take this trade here? Very simple. Price rallied. It took the high of day. It says right there. High of day, 1 standard deviation. High of day, 0.5 standard deviation. Okay. Then I saw price dropping. I was aiming for this, for the first percent for value gap for that day, for Thursday. But the time that I entered the trade, I can't recall if it was around 10:20, just roughly around that time. I was kind of busy at that time. I entered the trade aiming for this. Okay. The reason why I entered the trade short, it's because it went up to the high of day. Listen, it went up to the high of day, and once that happens, price more than likely is gonna retrace. targets could be, if you're bullish, so for example, I missed this run here. Okay, look at this. This is this whole trading day. Okay, this is Thursday trading day. Price opens, price drops to a predetermined. You didn't see me try to draw this. This was already there. Okay, low day at 0.5 standard deviation. Low day at 0.1 standard deviation. Okay, so what happened? Price dropped, hit the 0.5 standard deviation, and then rallied. It broke structure. Then it comes back into that structure during 9 o'clock, during the 9:30 opening. Then it price rallied. So this, because of the breakout structure here, already tells me this is the low of the day for that day, because it hit the standard deviation, 0.5 and 1. 1 didn't hit, but 0.5 it did, and then it gave us a breakout structure. Price rallies, comes, drops, and then this in the 1 minute time frame. This is the first percentage from value gap. Here I missed my entry to go long. Where would I have targeted? Very simple. Someone will tell you the highs, the liquidity, and that is correct. But I would target the 0.5 standard deviation. And that would have been my trade in the early morning. This was Wednesday's first percentage for value gap during the afternoon, I believe. No, 9:30 a.m. first percentage for value gap for Wednesday. This one. Then price rallied, and then that dropped, and then it went back up, and then it dropped, and then it dropped, and then it continued dropping yesterday. On Friday, I'm sorry. Why did it drop here? Why did it stop at this line? Okay, remember I didn't draw this line. This was already here in my analysis. This right here is the 0.5 standard deviation for the weekly low. This is 0.1 standard deviation. Price drop, break a structure, comes back, first percentage for value gap, go up, go up, go up. And we're back on our bullish trend. Okay, I took that little trade. I was being impulsive. I should have not traded because it was just ranging because of FOMC. And if you don't believe it, look, what time was that? 10 a.m. That low, that low. Look at that range right there. That's why you don't trade FOMC or before FOMC, because it's gonna give you this crap. Now, can there be trades there? Yes, of course again. But if you were, let me take off that execution so I can see. Now, why did I take that trade? I was thinking it was gonna go lower, possibly take that. I'm sorry, I was thinking it was gonna go higher. I bought. Why? I was thinking it was gonna go for that high, for the 10 a.m. high, and it attempted to do it, but it didn't do it. After it took me out, of course, it attempted to do it, didn't do it. That's one, two, three, 4 times, and it wasn't until 5:40 in the morning, Wednesday, May 28th, that it actually did it. And I already explained this to you on the MQ. This is I'm switching to the MQ because I'm gonna trade micros from now on. So this is that. That's what happened. Now you will see the same setup. The high of day, the standard deviations, 0.5, 0.1, 0.5, 0.1 for low of day and high of day. You're gonna see them for tomorrow's trading day. I usually do my analysis at nighttime, and I preset them. I will take a screenshot of it, and you will see the time. Remember, this is California time, but you're also gonna be able to see the time here. And then tomorrow's trading day, we're gonna see what hit, if any of those things hit. Remember, my stance is bullish, but in order for it to go bullish, it has to drop like it did here, and then it rallied. And then I'm not doing anything because it already hit that. Right now it's just slowly dying. Okay? So this was just for me to test the stream. I've been having issues with my past computer. I was using a laptop, and I upgraded a little bit. I still, if my mic doesn't sound good, I'm sorry. It's just a regular mic with headsets. Um, that's about it. Okay, I'll continue doing this. If you think this is cool for you, I will tell you how I get to this, how I derive to these deviations, and we'll go from there. With that being said, be safe, be brave.